Welcome back. Now, the latest out of the California wildfires, which destroyed properties across the state. The New York Post estimating up to $275 billion in damages. Just last month, members of the National Association of Insurance Commissioners visited Southern California, observing the aftermath to assess the growing threat of weather-related tragedies. Insurance regulators from across the country holding a critical meeting in Minneapolis, focusing on consumer protection, climate adaptation, affordability, and more. Joining me now with the very latest is the National Association of Insurance Commissioners, John Godfread. John, good to see you. Thank you so much for being here, and we want to get your take ahead of this very important meeting that you're having. First, on the California wildfires, who's picking up that tab?
Well, Maria, I think it's a combination, right? I think you've got the insurance industry has responded exceptionally well in that space. I'll go back to, we had 40 regulators on the ground over 40 states seeing the aftermath, and really proud of the response that the California Department of Insurance had. They were one of the first state agencies on the ground, really helping and assist consumers put their lives back together. I think billions and billions of dollars of insurance claims have been paid out since that moment. And that's a true testament, I think, to the market is working and the response is there. The insurance industry is there to get you back to whole, hopefully, right? We're there to pay the claims and get that money back into your pocket. What happens after that in terms of recovery and how you go about rebuilding? There's going to be a lot of discussion at the local level and the state level of how they go back and recover from this fire. But the challenge was, this is really the first time I think we've had an urban wildfire, which is unfortunately a new term that we're going to have to deal with. But I'm honestly proud of the response that we've had on the ground as insurance industry and as the insurance departments.
I mean, what are people's options if they, live in areas where, the weather is an issue, the water is an issue, and they can't even get insurance? What are they supposed to do?
Yeah, I think you've seen states respond with they've got a fair plan or kind of the insurer of last resort. But I think your point touches on a more important topic. We've probably been a little lax for decades at the local level when you look at where do we build these homes, where are we building these structures, and what kind of regulations do we have around building codes and wildfire defense and the safety that we need to have to make sure that our communities are resilient. The insurance industry is a private industry. There has to be some incentive there to write that risk, right? They're putting an investment into that community to cover that risk. And if local leaders and if the building codes and things like that aren't up to code, there's really no incentive for the insurance industry to write in that area. And so I think we're seeing a pretty significant response on how do we go forward, how do we make sure we have resilient communities that can adapt and hopefully prevent these losses.
So how are you using technology, and in particular artificial intelligence, as an insurance tool?
Yeah, that's exactly it, Maria. It's a tool. I'm pretty bullish on artificial intelligence. I think there's some really good opportunities in there to make this data-heavy industry a lot more efficient. AI is really good at taking loads and loads of data and analyzing it very, very quickly to give us some outcomes. The thing that we're focusing on is making sure that if there is determinations, like adverse determinations or decisions being made that impact consumers, that there's a human in the loop to review those discussions. But I'll tell you, state regulators have been on the front line of this issue. 6 years ago, we passed the artificial intelligence principles, which was really a first kind of step into this space, outlining the things we expect from the industry if they're going to use this new tool. But also the nice thing is we've got 150 years of experience. We've got underlying state laws all across our country that gives us the tools to take to protect consumers.
Okay. And in terms of the growth of the sector, where does that come from, knowing that there are all of these pressures and people are afraid, companies are afraid to actually take on that risk?
Well, we're actually seeing capacity build. We went through the times of the COVID pandemic and we saw a bunch of the hardening of our property market. But I'll tell you, we were on the ground in California talking with global reinsurers and looking at the capacity in those markets. And there's investment coming into the industry. So I think we're excited about seeing some of the softening of that market. So you're seeing rates stabilize, you're seeing markets stabilize, which is all really good things for the consumers. And I think as we layer on these resilience projects and programs, we're hopeful to see that those rates will continue to come down and it'll remain affordable.
And Jerry Willis, jump in here.
Hey, John, Jerry Willis here. I just wanted to ask you about a study from the Consumer Federation of America that shows there's actually big increases, not a stabilization in prices that consumers face in this marketplace, and they come from surprising places. Utah, over the last 3 years, rates are up 59%, Illinois 50%. I mean, you look at this, it's not just a tragedy for people who own homes, it's also a tragedy for people who want to buy. It's constraining the housing market. What can be done, John?
Yeah, I think, again, it goes back to this PNC market for a long time, especially these areas like Utah, Illinois, you mentioned, even in North Dakota. It had been a pretty sleepy market. It had been pretty soft and pretty easy to maintain. But we've seen global catastrophes going across the globe, and you've got wildfires out west, you've got hurricanes in the southeast, you've got convective storms blowing across the Midwest. These are real losses that impact the industry. And we've seen data that shows, for every dollar they're collecting in premium, they're paying out $1.20 in claims. They're upside down. That's going to have to be corrected somewhere. And so we're seeing that reflected back in rate. But what I'm saying is we're seeing capacity build in that market. So we're hopeful to see this stabilization starting to play into place.
All right, we will leave it there. John, great to have you this morning. Thanks so much.
Thanks. Anytime, Maria.
All right, John Godfread joining us.